The Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody. A glorious, finally, May day on the long weekend.
Right? Isn't it beautiful? It's the sun
has arrived.
Yeah, the
Finally.
sun is shining, and it's going to be a beautiful day today, so it's awesome.
Beautiful weekend, actually. The forecast looks incredible for the whole weekend. Still a little cool in the morning, but certainly hitting the 20s and apparently 30 on Tuesday. So
what a delayed spring, though, eh? Like, usually by now, I mean, boats are in the water, pools are open. It just feels like it's been such a delayed spring.
Well, we've seen it in the real estate market as well.
Oh, for sure.
Normally, we start to get very busy mid-February into March, and we haven't seen that busyness coming up until like the last couple of weeks.
Yeah, I mean, I talked about it last week. I mean, Jan, Feb, and March were not great months in the Ottawa Real Estate Board. And, April, the numbers were decent, but we felt it as a really strong April. And May's been decent. Like, we were talking last night, there was, every time we sell a home on our team, an email goes out to everybody on the team. And there was like 7, 8, 9 emails that went out last night. So there's tons of sales last night. But, May started off a tiny bit sluggish. We'll see what the numbers are like at the end of May. But April really started to see the churn of the sales. And I think a lot of it, too, is confidence. A lot of it is weather dependent. A lot of it is what's going on with this HST credit rebate. We just saw a delayed spring, and we've seen that before. A usual spring in Ottawa is like mid-Jan, it starts to roll. Mid-Feb, it's rolling fast. And by March and April, it's almost like you've missed the spring market, whereas we didn't see that this year. We're now just getting into our spring market, which is not usually the way Ottawa performs.
It'll be interesting to see as we get into kind of mid-June, which in the past I've always felt that it sort of starts to trail off as school's ending and people are just getting in vacation mode in their minds. Well,
and the thing about our weather is, I'm not going to sugarcoat it. Our weather sucks, right?
It has for sure.
Our weather sucks in Ottawa. It really sucks. I mean, we get tons of snow. We get cold winters. Our summers are stifling hot. So our weather really sucks. And I can tell you, the real estate market is dependent on the weather, meaning like we don't get a lot of time where we can go and enjoy the cottages, enjoy the water, and enjoy the vacations and all that stuff. So usually July and August is a hit or miss. It could be really busy, maybe because we've had a delayed spring. So I expect this July, August to be busy. But when we have a really robust spring, sometimes July and August is dead because everyone's enjoying the outside. Yeah. I know on our team too, it's like every weekend we got one of our inside sales agents like, I don't have anyone to book right now.
Who's
Everyone's
available
off.
for
Who's
appointments?
available for appointments? So, so it all depends on what the spring looks like. And because we've had a very delayed spring, I expect summer to be quite busy this year. I think,
it'll flow a little bit into summer.
It'll flow a little bit better this year into the summer for sure.
Well, speaking of HST rebate, Frank, you were down at Queen's Park on Monday, right?
I was, but I think the overall confidence level of many Canadians is also partially responsible for the fact that real estate sales are down. And not as robust as we'd like to. As much as interest rates are a big part of it, and interest rates have gone up a little bit, especially the bond markets have gone up because of this conflict where oil prices are back over $100 a barrel, so therefore bond markets react to that. So the sooner this conflict can end, the faster we'll see some of these interest rates come down. And I think the confidence level will come up. But I'll tell you, going to Queen's Park like we did on Monday and discussing, I mean, our goal was to talk about, number one, the HST rebate, which they promised us on Monday, and they actually delivered a little bit. It looks like it's passed on the provincial side. There's just a little bit of now back and forth between the provincial and the federal government of how it's processed. So it's there, and I've noticed the last couple of days the provincial government has got some advertisements out on radio. Hey, go out and buy a new house. The HST rebate is now intact. So,
and they're talking about the full 13% at this point.
So, Frank, just to recap, it is passed, but it's not processed yet, meaning they're still working out a couple
how to process it. Of course, the provincial government's saying, listen, I mean, we want it right on the purchase agreement, and you guys can deal with CRA. The other thing that they're looking at is, so who gets it? So, granted, it started April 1st, but there's still some question marks, and we raised them. What about somebody that bought a house in February, but they haven't even put a shovel in the ground? Why shouldn't they be able to get this rebate because they didn't buy in April? So now somebody that's buying in April is going to get a house for $120,000 less than the person who bought in February, and yet the shovels are not in the ground. That needs to be sorted out. So that's the kind of things that they are still up in the air. But
how builders are going to deal with that too, right? Because you're going to be. I already know there's some builders out there that are saying, no problem, I'll rip up your contract and give you a new one. We're good to go with that. But we've talked about this before. At what point does that become fraud? Right? At what point does CRA say, whoa.
No.
Yeah, no. You bought this house before this program came into effect. I don't care if shovels aren't in the ground. You can't do that.
Well, that's what the builders don't want. That's what the governments don't want it either. In hindsight, they didn't think that far ahead into what happens in scenarios like this. So I'll tell you one thing that, we made very clear. You can't have people getting a rebate after the facts or after they close. So they can't be buying with 5% down and then getting a 13% rebate unless that 13% went all against the mortgage. Like, you got to apply towards the mortgage. Otherwise, you've got a lender and a default insurer that now, finance the home on $800,000 when really after the rebate it's only $700,000. Well, they shouldn't have a 95% of $800,000 mortgage on the house when actually the purchase price was $700,000 after you take the rebate into account. So, the person shouldn't be getting that money back to go on vacation or go something else, because now you've got a mortgage of $780,000 on a house that's really $700,000 or $720,000.
Well, and how does that affect the resale of that same house down the road?
Right. Yeah. The other thing that builders are doing right now, because I was actually interviewing a guy yesterday, and he was telling me how he bought a brand new build. He's a first-time home buyer. He bought it at some point in 2025. I think he said maybe – I can't remember when he bought it. But anyways, the builder he bought from, and it was a big builder, actually put in there – they guaranteed the 13% because they knew this was coming in. So they said, we will guarantee the 13%. And if it doesn't come in, well, we've lost 13%.
They're eating it.
Yeah, they're eating it, which I think I thought was interesting, which I thought, listen, if you're confident that this is going through and you're a builder that's guaranteeing that 13%, sure, it's a big risk, but would you not be buying off that builder? I would. If they're guaranteeing.
I think we need to talk to that builder. They seem to know more than anybody else about.
Yeah, and it was
they're taking a chance, right? I mean, it's a big risk. I mean, they're rolling the wheel and hoping that they're able to do it, and I hope they are, because otherwise 13% is a big hit for a builder to take. So,
especially with the increase in price of everything, the materials. Yeah.
So here's the good news. It's passed, which is amazing.
Hooray!
Right? So now first-time home buyers, obviously, whether
any home buyer that buys a new build.
I know any home buyer, but also first-time home buyers.
Yeah, for sure.
First-time home buyers who buy a new build goes back to proactive back to March 20th, 2025. You are now getting 13%. And if you're
that's not.
Yeah, sorry. This is what is
hopefully
going to happen.
Right.
And then any buyer who buys a new build as of April 1st comes into effect. It's passed, just not processed yet. So,
but I'm not convinced, and you talk about the March 25, I'm not convinced that the government's going to be okay with somebody that bought a house in March 25, moved in December of 2025, that they're going to get that rebate. I'm not convinced that that's going to be passed. What I think they're looking at is somebody that hasn't moved in yet. So if they haven't moved into their home and their home hasn't been closed yet, those are the ones that I think are going to be able to apply for that rebate and have it.
There's going to be
it taken off the purchase price. Yeah. It's going to have to come off the purchase price because, like I said, the lenders and the default insurers are not in favor of that rebate going back to the consumer for them to do whatever they want, because now they've over-mortgaged the house. They've over-lent on the house. So there's going to have to be a solution for that.
It's funny. When I bring out some sort of program or some sort of incentive to my real estate team, I'm ironclad with the rules.
But you're not the government.
But I'm ironclad with the rules. Here's the rules. Here's the guidelines. Here's how it goes. Here's the steps. You think the government would have thought this through, eh? What happens if this happens? What about if this happens? Who qualifies for this? What are the actual dates?
No, the thing you got to learn about the government is that it's all about headlines, right? So what's the headline? The
Flashy
headline is, hey, you're going to be able to get 13% off. They don't look at all the little points that are important to be able to get across the finish line. They don't look at any of that. They don't communicate with CRA.
Yeah.
Like they do it after the fact. So they'll tell CRA, here's how these are processed after the fact, even though they made the announcements. They don't let the default insurers, the CMHC doesn't know. They find out at the same time as we do. That makes no sense.
How about new home builders had no idea?
That's what I mean.
I had three.
Banks, none.
I have three friends who are new home builders, some small, some medium. And they're like, Paul, what are the rules and the guidelines on this? I'm like, you guys don't even know. You're the guy who's selling the product. They had no idea.
That's the problem. But again, I mean, overall, the meetings went well, though, at Queen's Park. Very receptive, and I'll tell you why I think there's a lot of receptiveness. Number one, I mean, the hot topic today is affordability.
The key word of this year.
Housing and affordability is big, big, big. Everybody wants to build homes. Everybody wants to build, homes that people can move into, specifically young Canadians. But what's really interesting is the fact that most MPs at Parliament Hill and MPPs are in their 40s and 50s, and their kids are approaching the 20, 25, 30 years old.
The buying house
and
phase.
they're looking, and their comments back are like, so I'm not going to be able to get my kid out of my house because they can't afford houses. So that's what's actually a little bit of a motivator for them. It's like, you're right. We got to do something about
affordability is a problem.
Yeah, it is a big problem.
So before we go to break, every single time I get a text from my good buddy Mike Crete. Every time we're on the show, I get a text.
Mike.
This is the next text. Frank is so smart compared to you. How in hell did you get on this show? Let Frank speak, please. Shh. Thanks, Mike. Appreciate that. Yeah, appreciate that.
Well, you can't text us, but you can head over to realestateandmortgageshow.com and submit your questions and or comments there. We'd be happy to hear from you, or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show, everybody. So, Frank, anything else that came out of your meetings down at Queen's Park?
No, we talk about 30-year amortizations. Again, part of the affordability is the fact that we can get longer amortizations. Again, my personal view, and I mentioned it to a couple of MPPs, is, we can make a strong argument for the fact that maybe there should be a 40-year amortization for first-time home buyers, and first-time home buyers only. You get one crack at a 40-year amortization, your first home, if you're in your 30s, which is where most first-time home buyers are. Maybe it eliminates the fact that parents have to go on as co-signers or guarantors, because on a 40-year amortization, you qualify, and then you can never refinance above 30 years. So it's just a one-time shot, boom, 40-year amortization. You get to get in with your 5% down, and then you have a payment that's close to what your rent is. 10 years ago, if you bought a townhouse and you were renting, 10 years ago, rents were about $1,500 for a townhouse. If you bought a townhouse, your mortgage payment was $1,500. It made sense.
It was on par.
Today, your rent is $2,500, but if you buy a townhouse, your mortgage is $3,500. So now it's $1,000 more for a mortgage, and most people can't afford that extra $1,000. So
why wouldn't they do 30-year amortization for everybody? Like, why just first-time home buyers?
Well, right now it's first-time home buyers, and or if you're buying a new build, we propose 30-year for everybody. Just give everybody, because now the 30 years only. Again, you can't get a 30-year if you're buying your second home with less than 20% down. So once you have 20% equity, you can get a 30-year amortization across the board. The other thing, too, that these shorter amortizations are doing, driving hardworking, good Canadians to alternate lenders that offer 35 and 40-year, because they're off of OSFI. They're not regulated by OSFI. But the interest rate is 1.5% to 2% more. So now we're telling Canadians, hey, you can have a lower monthly payment, but you're going to pay more interest to get the benefit of a lower monthly payment, even though you're very good. Like your credit's excellent, your job history is excellent. You just don't meet our stress test guidelines.
Right.
So therefore, you got to go to an alternate lender. We said just the banks are getting richer, the lenders are getting richer, and Canadians are paying the price for it. This has to come, at least, it has to come down. We've gone from the far left to the far right. As far as, it was too easy to get one. Now it's too hard to get one. We need to get back to the middle, and we need to open up those doors specifically for young Canadians, because you talk about the real estate market being a little flat. The reason it's a little flat is because the first-time home buyers are not in the market. Once the first-time home buyers enter the market, that's when you see a robust real estate industry. But if the first-time home buyers aren't there, then the industry tends to stall, because the people that were first-time home buyers that are ready to go to that second home don't have anybody to buy their home.
And I've said it before, first-time home buyers are a large chunk of our market. Like, first-time home buyers at one point were like 30 to 35% of our market. And then that allows, first-time home buyers get into the market, which allows now people to move up, people to move down. When you don't have that first-time home buyer product moving because they're not getting into the market, it stales the market. It really stalls it. So we need to be able to get those first-time home buyers in the market. And if we thought it was coming, we thought this new rebate was going to help as well. Rates coming down, we thought was going to help. Prices came down, which we thought was going to help. we're seeing first-time home buyers get into the market, but not like it used to be. I don't have the exact number, but where first-time home buyers used to make up anywhere from 30 to 35% of the market, I venture to guess they're probably about 20% of the market right now, which is a big drop, and we need them back into the market. That will be coupled with prices, with interest rates, with rebates, with incentives and programs. We need the first-time home buyers back into this market.
So how are things pricing out right now with the bank holding the rest of the year, speaking of interest rates?
Well, Bank of Canada is June 10th, so hopefully, I don't know, I know we've kind of talked a little bit about maybe that being our first podcast maybe on that day. We're looking if all the...
See if we can get it put together for them.
Yeah, so which is still 3 weeks away, but hopefully if all the... I know we're waiting for a couple of things to come in, but if we can do it, June 10th right now is expected the Bank of Canada is going to hold firm. What's interesting is that U.S. Treasuries at that same time, and of course the new Fed chair starts in a couple of weeks in the U.S., and that individual has already hinted at the fact that he's likely going to lower their prime rate by a quarter point. So they'll take the lead on that. Now we've lowered much quicker than they have over the last 2 years. So therefore we've already lowered it. They haven't as much because they've had inflation still elevated, and their inflation still elevated the way it's calculated right now. But this new Fed chair has figured out a new way to calculate inflation somehow that hasn't been right for 100 years. He thinks this is a new way to do it. So therefore the inflation number is going to come down, which will give them the opening to be able to lower interest rates. So what effect that has on the economy in the U.S., we're not sure. What effect it has on Canada, I think Canada is all about three things, and Bank of Canada acts very closely based on what happens with inflation, GDP, and job reports. Job reports obviously have been extremely negative this year. We've lost way more full-time jobs than we did, I think, all of last year already.
What was the number? 117,000 or something?
120,000 full-time jobs already lost. And by the way, this is before, most economists said that a lot of the full-time jobs would be lost in the second half of 2026, not the first half. And here we're already such a high number for the first 4 months of 2026.
What percentage of that are government workers right now?
Not as many, because a lot of them are still on their... They haven't, like a lot of them have accepted and or looked at doing it, but it hasn't been officially done yet. So that's why they predicted 2026 would be the bigger number of full-time jobs lost. So
in the back half.
Yeah, so that's a little bit of a scary thing moving forward. On top of that, you've got GDP and you've got a trade agreement with the U.S. that seems to be going nowhere fast. And it's nice that Canada is setting up agreements with other countries, which I think will be good in the long term. But short term, we still need that agreement with the U.S. Otherwise, these tariffs are hurting a lot of industries out there. So again, those are two negative things. And the other one is the inflation. We saw inflation go from 1.8 to 2.5 only because of oil prices. And oil prices are still stubbornly high. Right? Yeah. So the next report that comes out this month will likely be close to 3%. Again, their target rate is between 1 and 3. I think Tiff Macklem, the governor of Bank of Canada, has hinted that he's willing to let inflation, go above that 3% and maybe not touch Bank of Canada rate for a little while, because he thinks that and hopes that this conflict will end soon enough and oil prices will come back down.
Yeah, but they're saying even with the oil prices, even if the conflict ended today, it'll take
a couple of months.
They say it's going to take 6 to 8 months. So we could be high prices like this for a long time, and it's affecting more people than just filling up your car. I mean, look at groceries, look at everything is being affected right now by gas prices.
We're not seeing it as much right now. So at least the grocery stores are saying, listen, we haven't lifted prices yet. I think if it goes on for another month or two, we'll start to see it. Now, that's funny to say, because anybody that goes to a grocery store today says they can't believe the cost of everything anyway. So,
how about a restaurant? Going to a restaurant nowadays is
incredible.
It's impossible.
But that's the concern. There you're talking about it right now. That's the concern that a lot of Canadians have. And listen, we're in the summer. People go to the restaurants in the winter because, you can't barbecue. You can't. I think we're going to see the restaurants really hurting in the summer because people can stay at home. They can do a barbecue outside. They can cook outside, and people want to be outside. So that's what I'm worried about, is more in the summer. I mean, I think the touristy areas will be okay because tourists will still flock. But I think it's the other parts of the city where there's not a lot of tourists that are concerned about whether their businesses will continue to flourish throughout the summer.
Yeah, it's becoming a bit of a tricky time. And just everything that I've been reading is that the GDP numbers and the inflation numbers are not looking to get any better the rest of this year.
Well, the inflation's going up. Now, the idea is to keep inflation between 1 and 3. So I think we're going to hit that top close to 3% when it comes out later this month. But, hey, we've got a great seminar that I know you guys are coming to, Symposium, Canadian Mortgage Broker Association, May 27th. So I'm putting this out to all general public, I guess, if you want to come. If you want to be educated, you're welcome to come. But it's really meant for our mortgage industry and real estate industry. But, there's a fireside chat between Melissa Lamb here, who works at CTV Morning, and Nicole Christie, who's the president of the Ottawa Real Estate Board. So that'll be very entertaining. At the same time, we've got Greg Casey, who's the risk manager for Sagen, who's one of the default insurers. He's going to talk about what Canadians are going through and what he's seeing, which areas of Canada are really struggling with mortgage payments. What happens if one is falling behind on mortgage payments and they've got a default insured mortgage, how to handle that. So he'll talk about that. We've got Reuven, who's going to talk about AI. AI, not only for mortgage and real estate business, but for people in general. We got some high-profile mortgage brokers that will be talking about what's going on, what they're seeing from customers. And then the last one is, not the general public, but real estate agents and mortgage brokers are interested. I mean, Paul, you still got maybe another 5 or 10 years. You're getting up there, but
God.
But getting your business ready to sell, right?
Yeah, absolutely.
So again, great topics.
I'm going for that one, and I'm going for the breakfast and the lunch. That's about it.
Yeah, and it's like $99, and so worth it. But hope to see a lot of realtors out there, and I know there's going to be quite a number of mortgage brokers and agents out there too.
Well, and you can meet Paul and I, and
that's right. You can get autographs from Paul. So it's at the Brook Street on May 27th.
I think Greg's more famous than I am. So.
Absolutely not. Have a question, head over to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back.